Eric Muathe, Muathe.com, with U.S. market analysis for the weekend of June 3rd and June 4th, 2017. Let's take a look at markets here. We begin with the NASDAQ monthly, and of course we can see that the NASDAQ, just like the other markets, did close at all-time highs. And to be honest, if you go back and take a look at the long-term monthly chart for the NASDAQ, now those of us who are trading the market during this period here and also saw this drop, experienced this drop, this run up, and then this drop here in 2008, those of us who are trading in the market at this time never thought we would see a NASDAQ above 5,400, somewhere on there, maybe 5,300, which was this intraday high. We thought this was an all-time, lifetime high, but here we are. Market has cleared that high, and not only cleared it, here we are seeing a nice move after breaking out. So that's the perspective here. And over the last, let's call it, how many months? Well, let's count them. 1, 2, 3, 4, 5, 6, 7, 8 straight months to the upside. So at some point, yes, we are due for some type of a pullback, but don't forget that as long as we are seeing the market trade above 69.1, keep in mind that's the lesson we saw in between 2013 and 2015, is as long as the market is trading above 69.1 on the monthly chart, expect the market to be stable, to be trending higher. Pullbacks are going to be there, but they are going to be shallow. And it's exactly the same thing that's happening right now. Ever since we jumped above 69.1 for the NASDAQ monthly chart, we can see, yes, we've got shallow pullbacks, but the market continues to grind to the upside. So since we are still trading above 69.1 on the monthly, we just have to take what is there, which is that markets are strong. Yes, we can get pullbacks, but don't expect a major correction until the market moves back below 69.1. In fact, for the NASDAQ, if you take a look at the weekly is trading above 69.1, has been trading above 69.1 since about, let's even say, since February, and reclaimed it here in April, and we continue grinding higher. So on the weekly, we are trading above 69.1 on the NASDAQ. Same thing on the daily, we're back above 69.1, and same thing can also be said on the hourly. For the NASDAQ, we are still holding above 69.1, which might explain this accelerated move over the last couple of days, and also on the 30-minute chart for the NASDAQ. So all time frames, major time frames for the NASDAQ, continue holding above 69.1. As such is the case, this is a scary market that is very strong. It's going to take a lot of energy to break this upside momentum. And if you go back to that monthly chart for the NASDAQ, the takeaway from this video and this analysis, as long as markets are trading positive for the month, then momentum is going to continue to be positive. So it's only when we turn negative for the month is when some of the sectors will turn negative. But right now, as long as monthly charts are positive for the month, that is very strong indication of upside momentum, because the big time frame, the monthly chart, is very, very strong. If we take a look at the Dow monthly, we can see the Dow actually moved above its 69.1 threshold level sometime in November, December, and since then we've seen a nice move. In fact, we can even say this was another breakout after 1 month of rest. So the monthly chart here continues to be absolutely powerful. And again, as long as the Dow is up for the month, this is a market that you should respect the upside. We take a look at the weekly for the Dow. This past week, it just reclaimed the 69.1 threshold. And also we can see that there's a price breakout above the previous weekly closing high. And the level to watch here is 21006.94, which happens to be this weekly closing high. As long as the market is above that level, this is a market that could easily see substantially higher price levels. Also, as long as we are trading above 69.1 on the weekly, this is a market that is poised. As long as this price breakout and RSI is above 69.1, is a market that could very easily see higher price levels. Let's take a look at the Dow Daily. And the Dow Daily is also breaking out in terms of price. This was the prior all-time daily closing high. We closed above it this past Friday, and the level to watch there, the market needs to hold above that, and it is 21115.55. So as long as the market is above that number, this is now clearing that resistance, and chances of higher prices are there. So since we closed above that price level, who are we to question the market's intent? If we take a look at the S&P 500, it jumped above 69.1 on its monthly chart sometime in January or February. And we can see here, just like the Dow, there was a 1 month of rest and a breakout. So it looks good. As long as it is holding above 69.1, this market could see substantially higher price levels. In fact, we can also see evidence of this if you take a look at the S&P 500 between 2013 and sometime here in 2015. It's about 2 years where the S&P 500 for the most part stayed above the 69.1 threshold. And yes, we got pullbacks, but they were shallow. Market would ultimately record new highs while it stayed within this 69.1 threshold. So here we can see that markets are absolutely very strong as long as they are holding above that level. We can see the SPX also this past week reclaimed the 69.1 threshold. So as long as that's the case, well, this market has the chance to record higher price levels. And we should also not forget that we did break out above the prior weekly closing high. So as long as it is also holding above that price level, even with pullbacks, as long as the S&P 500 is successfully defending the previous weekly closing high, 2399.29, which is this weekly closing high, as long as it successfully defends that price, then this breakout continues to be intact. In other words, the bulls are still in control of the direction of the market. If we take a look at the daily for the S&P 500, we can see that it ended the week and the last trading session on Friday above 69.1. By the way, check the description for where I get that number. And we can take a look also at the hourly, and we can see it ended the week with the RSI above 69.1. And we can also see that on the 30-minute chart for the S&P 500, one of the reasons why it refused to go down at current levels is because on all time frames it is holding above 69.1. So we spent the beginning part of this video pretty much trying to understand why the market is strong and could continue being strong. Now let's take a look at some things that could actually be a reason for a pullback. In other words, things to watch for. And I have to admit, there are not very many, but they are there. Let's take a look at some charts that could indicate exhaustion around current levels, and its only potential for exhaustion if the market goes on to stall around current levels. Let's begin with the Dow Daily, and we just have to go back to this recent break. So once we broke down here, we come off this level for a shallow pullback. We've been drawing a line from there on the Dow over the last couple of months, and it's actually been good guidance in terms of stalling here and here for short-term resistance levels, and we did end Friday exactly on that line. Is this line going to be resistance? Well, we just have to wait and see. But let's say if we begin the new week with the market showing resistance on that level, then chances are this is where we can expect the market to show signs of a pullback. How much of a pullback we're going to get is tough to tell. The only thing we can do is use what we have moment to moment. At some point, this market is going to record a major high, but we don't know where. It could be in 2 days, 2 weeks, 2 months, 2 years. Who knows? If we take a look at the Dow hourly, we can see here a little bit of rejection when it tried to move above 69.1, which might be why it came off the intraday highs on Friday. And if you take a look at 6 months hourly, keep in mind on my RSI settings for the 30-minute and the hourly, I am using RSI setting of 26. But what we see here is if you take the tops of the hourly RSI, you can see as of Friday we tagged that line and we seem to have been rejected. So on the hourly for the Dow, this is a level to watch for potential resistance, which is already being respected. Now, of course, we don't know if the market opens the week and trades above that. If it breaks out, then of course it's gonna see higher prices. But if we take what we have in front of us, which is that the market as of right now is responding to this line by stalling around that line, RSI top lines, then we have to assume that the market is telling us the Dow at least is running out of short-term energy. If we take a look at the Dow Transports daily, we go back to this warning high. So we stalled here, which is this shallow movement, and we draw a line from there, which is a uniformity principle. Check the description under the video link and you'll see an explanation and a link that describes this in detail. But you can see that this line has been a problem in terms of the RSI resistance here with uniform action for those highs. We tried to move above the line here, were rejected for those short-term highs. The ultimate highs eventually came there, which is this resistance in price, and we are here back testing that line. So the market does need to move above this red line, otherwise failure to move above this line suggests that around here we can start expecting some type of a pullback. If we take a look at the S&P 500 daily, we can also see that this was the short-term break. This RSI trendline break here brought the market off those intraday highs, and we had some type of a shallow pullback. We take that information and draw a line somewhere there, just at about 69.1, and we can see here that if it stalls and moves back below 69.1, especially if it does that with uniform action, chances are this is where we can expect some type of a pullback. So those are some of the reasons why the market could stall around current levels. Otherwise, if it can clear and stay above 69.1 on the daily, then of course it's going to record higher price levels. So how would somebody conclude here? And if you take a look at the monthly, as long as markets and any sector you're trading is positive for the month, then the bias is to the upside. Of course, we've looked at reasons why there are some signs markets could actually stall around here if the Dow daily, S&P daily, Dow Transports daily are telling us something. Now that concludes the free portion of the video, and the rest of the video is gonna be for subscribers to my premium service. Otherwise, enjoy the rest of your weekend. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. Otherwise, for subscribers, let's continue on.